But shifting conversation once again, shifting focus back to corporate conversations rather, we have Mr. Ashish Gaikwad, the MD at Praj Industries, joining us on the show. Now, overall, it's been a largely weak set of numbers coming in from Praj. Mr. Gaikwad, hi, morning. Help us understand what has ailed the quarterly earnings this time around. Your EBITDA has taken a knock of 33%. Margins have also significantly contracted. What has gone wrong in quarter three, and what is the outlook for the quarter to come as well as the next financial year?
Good morning, and thanks for having me. Yes, what you summarized is true that we have taken a hit on the bottom line. But if you compare that with the previous quarter, it's essentially two things which have impacted the bottom line. First one I would point out is the new wage code, which certainly asks all the companies to provide for the gratuity related amounts. And this is a one-time expense that we had to show on our P&L. And the second one essentially is the mix that has changed. Now, you know, in the past discussion we've had that we had a dependence on the exports business and also to the US to that effect. And the proportion of that particular revenue has gone down, and therefore the mix has changed, and that has resulted into impact on the bottom line. Those are the two main I would like to point out.
Right. Mr. Gaikwad, you spoke about the US business. Now, I'm inclined to ask you, now with the trade deal that India has signed with the US, we have more clarity on that. We've also signed other trade deals with the EU, UK as well. Talk to us about if this is going to lead to any improvement in your international business, especially when we talk about the US.
Absolutely. The short answer is yes. But as you know, ours is a long cycle business, which means that we need to get into these markets. Of course, we have been active in these markets, and to get the orders and then realizing them into revenues is a cycle of about 12 to 24 months. So yes, over a period of time, as these new markets reopen up, I should say, because of the tariff hurdles, being taken care of now, we expect both the US market and the EU markets to help us.
Right. Okay. And also help us understand about the GenX plant. The full capacity utilization for that plant is now expected in FY28. Earlier, we were eyeing in FY27 sort of a timeline. What's the current capacity utilization level, and are we on track to achieve the full capacity by FY28?
Well, so first of all, when we started the Praj GenX business, the main focus was on energy transition and climate action type of projects, which are more on green hydrogen, on green ammonia and such. And as we know, over the last few quarters, the focus on those projects has been dwindling. And also there has been a slowdown in that market. So we have shifted our focus now to the conventional markets, also some of the new markets like the data centers that is opening up new opportunities for us. Also the CCUS, or the carbon capture, utilization and sequestration business. So these are some of the new sectors which are opening up. Also, we see in the union budget that the government is thinking of giving permission to use SEZ facilities to be also utilized for the DTA business. All of these are positive signals. We are, of course, right now underutilizing the facility, but we expect over the few quarters that we will see the capacity will catch up.
And what about profitability from the GenX plant? What is the status of that? You are currently at a fixed cost run rate of around 9 crore. When does that turn around?
Yeah, I think it links to the capacity utilization, the previous question that you asked. We believe that the next 2 to 3 quarters are going to be crucial for us to make sure that we now take advantage of some of these tariff reliefs which have come along, and we build our order backlog. That's what we are doing. In fact, I must share here that very recently we got a significant order, almost a 100 crore order, which is going to be executed from GenX facility. And it is a result of a framework agreement with one of the global oil and gas giants. And we expect that there could be repeat business from that. So we will have to build cases like this, moving away from the ETCA sector, as I called earlier, and therefore we are shifting both to the new sectors and also to the new geographies.
Okay, Mr. Gaikwad, on that note, I'm sorry, we'll have to let you go due to paucity of time, but thank you so much for taking the time out and interacting with us. We hope to interact with you next quarter as well.
Thank you.